Many backward steps are taken by standing still. Kevin Kelly. My friends, if you're just sitting there, tomorrow's when I'm going to start charting the market. I'm going to start practicing. I'm going to start listening every day, day in and day out. I'm going to do some of the trainings. I'm going to figure this out tomorrow. That is standing still, and that is going backwards, because the longer you put it off, the longer it's going to be until you have things like retirement choice, empowerment, the ability to actually look at a stock chart and understand what is going on. And it just takes a little bit of time. You can find 10 to 15 minutes each and every day. I find a lot more than that in all the things I do each and every day just to come here and bring you this for free. So use me as your example. Hey, Thom does this for us every day. Can't I do my own part and just follow the markets, practice trade when I start getting good at that? Fractional trade, which is using a small dollar amount, say $100 to buy a fractional share of the S&P, or if it's something like Bitcoin, what did Bitcoin close at today? $32.91. You could buy 3 shares of that. And again, practice trade it. Don't do that right away. Once you start feeling like you're getting your feet on the ground, then you spend a little dollar amount. What that lets you do is it lets you see how it is to enter a trade, how it is to exit a trade, to set a good till canceled sell order, to buy in at the right time, to make the mistakes that don't cost a lot of money. And you'll learn by doing. Let's jump into these charts. This is the day where the market starts the week off and everything is down. Now, things aren't plummeting. They're just slow on the uptake. Where are we with the S&P? We can see we've not reached the high of last week. High last week was 646.19. 644 is the high today. Market pulled back. It's really just flat, 0.02%. We look at where we are on the 2-day. Now, this is the Friday, Monday 2-day candle. As we look at the high on the Wednesday, Thursday, we see it was 646.19, 646.09. So we didn't reach, just barely didn't reach that high, and also didn't get average volume there. It opened lower than the prior close. We'll see how the new 2-day candle starts tomorrow. You can see a day and a half of red down candles here on the half-day chart and week volume. It is a summertime trading zone. Things will be getting better, though, my friends, as we get into the fall-winter trading zone. We typically get more volume. We get things moving in a direction that is clear, although I can tell you, I remember going summers where the market was choppy and crappy. This has just been an up market since late April, as things have just continued to move up. But there could be a down move. We'll see just what happens. How much higher can the market go? Higher than you imagine. But it can also roll over and hammer down, and we are cautious and watching. We are what? We are still long, decently, not up in the 80 probability percentage range, but we are decent. And again, if you're not getting our trade, our daily, which is our 5-day plus ETF trading analysis and execution plan, you need to be a Patreon member. You get it each and every day. In fact, it's already been uploaded for Patreon members at the Patreon page. As soon as I finish today's broadcast, I'll be emailing it out to them also, along with the trade execution summary grid that gives you the ticker symbol, the directional percentage probability, entry point, exit point, expected move in US dollars, and the backtest accuracy, as well as the best trade entry point, strategic profit exit point, expected move, the backtest results, explaining with the Heikin-Ashi candlesticks why we have that backtest accuracy percentage, the key patterns that we're looking at, and the significant differences and agreements between our 3 waves, which is the weekly, the 2-day, and the half-day. That's where we are on the S&P. The NASDAQ, it's also pretty much flat, down 0.04%. Again, not reaching a higher high so far. Opening lower than the prior close. We see that red down candle. We've got tiny little candle there for the 2-day with higher than average volume. And what is that telling you? The psychology of this move is telling you a lot. Did you take over the weekend the information I shared with you with the volume training so you understand the psychology of what you're seeing with that very small candle and all that volume? And you can see 2 days of down movement still, above the weekly trend line on both the half day and the 2-day and the weekly. But again, starting the week off weekly. Let's see where we are on TLT, 20-year U.S. government bonds. We have punched through that prior trend line. We ended last week with a doji with all that volume telling you that, again, there was a lot going on between the sellers and the buyers psychology-wise. And as this week opens, it opens in a down candle. You can see a significant down candle on the 2-day. Didn't have average volume. Got close to it as we did the week before. We can see that we've had 1, 2, 3 days of strong down movement. We punched through that weekly trend line on the 2-day and the half-day chart on Friday and continued down on Monday. So as we look at things, TLT is a little better than a coin toss, bearish and moving down. Backtest accuracy, not that high. But if you look at the trade execution summary grid, you'll see the numbers as they come in, what the expected move is, where there's some choke points, some support, and some downward pressure. As we look at gold, gold is just barely better than a coin toss down. I can't tell you anything I've told you. This horizontal trend line means that it's like a corpse. It's just dead. It's not telling you one way or the other which way the market is going. It is dead for us right now. We're waiting for something to add up. Down for the day, 0.16%. You can see the low volume the last 4 days. You can see how the volume's been okay on gold for many weeks, as it's just been ranging around. And again, it bumped up strong back in April. And again, we've seen a couple of highlighted weeks as everything else is just sort of, for the last many, many weeks, sliding mostly sideways, waiting for gold to give us some idea as to whether it's been going to be going up or down. Let's look lastly at HODL, pulling back for the day, 0.57%. We're still strongly, not up to the 80% directional probability, but not far below that. And also our highest backtest accuracy, we are still up and bullish on Bitcoin. Is down for the day. We had those 6 prior days of some up movement, reaching a higher high there. Let's see, yes. And this last 2-day candle, a red down candle, still above. Well, that's not much of a trend line there, friends. That, again, is about a horizontal. We can see how the half-day chart for, 2.5 days, really 3 days heading down and just sort of sitting at the end of the day right on that flat trend line. Not telling us a whole lot. It's hard for me to be bullish on anything that is that flat. But that is where we are. As we start the week off, like I said, everything down for the day. I'm just wondering when the stocks are going to top, because if indeed, my friends, they roll over, we know what happens. Tends to take everything with them. Bitcoin's not an outlier typically, neither is gold. Everything sort of gets sucked down as people are covering shorts and have to sell stuff like Bitcoin and gold until things sort of bottom out. Then you might see rallies in alternate sides of things, such as Bitcoin, such as gold. That is where we are as the end of the day on Monday. We love to hear from you. Always CW@chartingwealth.com. God bless, my friends. All the best from Charting Wealth.